The Fed, I think they're not going to say much, to be honest. There's no expectation in the markets for them to move. If they were going to move, they would have done a lot of groundwork prior to this meeting to suggest that. We saw that with the December meeting. They do not want to create market volatility, so they want to prepare the market as much as possible for any rate hike. I think you'll likely hear them say that a lot of the risks they worried about back in January have come back a little bit. The outlook is more balanced, and that they're very much looking at the data, and that will determine when and whether they hike rates. I always think back to what Janet Yellen said back in December, that is the rate hike path would be slow, gradual, but not mechanical. So I know markets are looking for quarterly interest rate rises on a pretty periodic basis, but I just don't think that will happen, and they will be backloaded towards the second half of the year.
Okay, Kerry, you've noted in your research that there are two issues for you right now and for investors out there, and one of them is the Fed, and you've just been talking about what your expectations are there, and the other one is oil. We've had the biggest two-day slide for commodities over the last couple of trading sessions for a month. Excuse me. So what is your outlook for commodities overall, in particular for oil?
I think nothing really has changed in the commodity space. You've had the market look at a commodity price which was very low, and they've come back on the back of that. There were some hopes of production freeze from some of the oil producers, but Iran isn't signing up to that, and therefore the prices are filling back. There is just fundamentally too much supply of oil and iron ore out there, and demand is increasing, but just not at the same pace that supply is. And so therefore, prices in commodities, whether oil or iron ore, are going to stay relatively low compared to their history. They don't need to rise massively, I think, for the market to have a better indication about where we're heading. They just need to start to stabilize a little bit. I do think you'll see the prices bounce around a lot, and that when prices are very low in any asset class, there's always lots of speculation about whether this is the bottom or not, and you'll see that affect the prices. But I think until you really do see that supply and demand imbalance start to correct, which it slowly will, that's when you'll see a genuine move higher in the prices, and we're just not there yet.
Kerry, I got to ask you, we've got a bit of news flow. Chinese Premier Li Keqiang speaking, this is on Reuters. He's saying that China will unwaveringly push ahead with reforms, but will try to avoid mass layoffs in the process of restructuring steel, coal sectors. That's where most of the overcapacity is. We get that. On the surface, it sounds good because, I mean, you know, who wants to fire people who wants to lose their jobs? But, you know, that suggests that, okay, they've got the money to transition these people, however, but honestly speaking, how are you going to turn a steel worker into somebody that works for like an internet company or something? Yeah, I just don't know. What do you make of these comments?
Well, it's the same with any labor force. You have to try and upskill them if you want them to become more productive and move into more areas. If China generally wants to move away from a manufacturing base to one that's focused on services economy, then they're going to have a labor force that reflects that, one that's more highly skilled. They still have their target of reaching 10 million in employment added this year, the same as they did last year, and they can achieve that because it is a command economy. I think the thing I took away the most from the press conference and the notes you had just before was that you actually heard the Chinese officials talking about the debt problem. The NPC really did have a great run on terms of targeting growth and the spend they were going to do infrastructure and the deficit coming down further as they were going to try and finance that. But it immediately raises a question about the size of the debt burden in China and how it is actually going to be mitigated, because that's the thing that overhangs the market the most. They seem to have largely ignored it in the near term until now. So the fact that they're recognizing it and they do want to deal with it, I think is actually quite a positive takeaway from that meeting.